All right, ladies and gentlemen, thank you and welcome to 5 minutes of your time talk show. Amidst an economy whereby taxes are skyrocketing to dizzying levels, today we get to have the time and the pleasure to talk with one of the tax consultants. My name is Lina Sanari, and with me is Jeremy Kevin. So, Bona Bran Otieno, karibu sana.
Thank you so much, Linus and Jeramil, for having me on your 5 minutes talk show.
Awesome. Yeah, if you may allow me to ask first, the first question that people might probably be wondering, like, what's the whole point first to, what's your whole job as a tax consultant?
Thank you, Jeramil and Linus, for that question. First, a tax consultant is basically a person with expertise in the tax field and who provides services and advice to individuals and companies and entities on tax questions. So they can give computation of taxes through using Excel or all those kind of tools, or they can advise in a transaction. Maybe someone wants to buy shares or buy land and they want to transfer it. They advise on some of the tax implications of those transactions.
Okay. Great. Now to my second question. So, like, what's the one big thing that you've learned, like the one big loophole or discovery you've learned about tax that you wish Kenyans really knew? Like that one big discovery.
All right, thank you. There are quite a number, though, because I think I may begin from defining the difference between tax evasion and tax avoidance, because every sane person wants to pay the least amount of tax to the government. So probably one that I think is not known to so many is that partnerships are not taxed as an institution. That partnerships pay tax, like the individual partners pay tax as individuals, so the entity is not taxed. And if you now have like a limited liability partnership which has the benefits of a company but also has the benefits of a partnership that is being taxed on the individual heads and not the company, then it's an advantageous kind of entity which almost every person I would advise should go for that kind of thing to reduce the tax liabilities, because if you're in a company, you pay tax as an individual and you also pay tax as a corporate entity.
Okay, so you're basically advising people on how best they can lower the amount of tax that they're charged.
Yeah, I think it's quite obvious that probably if you want to lower taxes and you don't want to pay tax double, just have a partnership, and then your tax will be, when you pay tax as an individual, it's fine. No, you don't need to pay tax also as a corporate entity.
All right, brilliant. So, Bona Jeramil, I'll have to pass the mantle on to you.
Thank you, Laina. Thank you, Elder Pan, for briefing us. My first question will have to do with the first question. Are Kenyans generally from your end?
Well, that's a good question, Jeremy. It is true that Kenyans are overtaxed. Generally, there are so many taxes, both direct and indirect taxes. I will tell you, for instance, that if you are earning as an individual and you're employed, 30% or slightly below is given to Caesar, the government, in form of taxes. And after giving 30% of your income directly to taxes, 16% of every item you buy is given to the government in the name of a value-added tax, VAT. So those two alone take away virtually 46%, almost 50% of your taxes. You haven't paid excise when you are dealing with things like mobile data. You're dealing with things like bankings and etc. So basically, it is estimated that approximately half of your earnings as an employee goes to the government as tax, either as direct tax or indirect taxes. Now, leave alone that, and then now go to some of the levies that you meet without knowing, like LPG. If you're having a car, you pay LPG on fuel and etc. That is still taxes, and it's basic. It's almost arguable that when you are working for a company or you are employed, it's like almost 60% of your money goes to government through taxation. So basically, a country is overtaxed. A lot of it goes to, even say you have investments in shares and you're investing in land and you want to transfer it, still there's capital gains tax. So a lot of the money that we make in this country is taken away from us by the government. It's true, yes, Kenyans are overtaxed.
Okay. Now getting into the next question. Now there are people, we have the financial bill which was recently made. Can you tell us the implications of the financial act? But which are the various increments that have been various taxes which have been reduced? Maybe you can share with us.
Okay, thank you so much. That's a good question. It's a current one. First, I will say that the Finance Act 2022 was meant to really steer the economy back into its lanes. That is basically to help the recovery of the economy post COVID-19. And so much of the amendments or much of the provisions are talking about, exempting things like vaccines. Companies that manufacture vaccines are now exempted. They are not taxed on any of the taxes, income tax and all that. And another thing about such companies, or about the Finance Act 2022, is there's some very steep increases. Like capital gains tax was basically 5%. Capital gains tax is tax that is levied on transfer of immovable property like land or transfer of shares that are not traded in the Nairobi Stock Exchange. So such kinds of taxes have been, it has been increased from 5% to 15%. That is triple the tax it was previously. It's quite a steep increase. And we have also seen, some proposals were there before that have been dropped. One probably is the digital services tax, which was being levied on non-resident entities. And the bill had proposed to increase it from 1.5% to 3%. Right now, that proposal has been dropped. It has remained at 1.5%. And again, they have also exempted non-resident companies that have permanent establishments in Kenya. Basically, companies that, have a presence in Kenya and we can be able to prove based on the parameters set in the law that they are permanent establishments. Then in that case, then they are now exempted. They are not supposed to pay digital services tax. So that's a win probably for non-resident companies that have a presence in Kenya, like those kind of multinationals you may think about, Google and etc. But I think probably just to give a brief comment as I finish on this, the Finance Act 2022 is a mixed basket. There are good wins, that reduction, some of the exemptions we've seen, but I think it's also a loss to Kenyans, basically on some of the increases we've seen. But again, it's good that some of the proposals that were there in the bill have been dropped, like increasing taxes, VAT on maize, for instance, maize, corn, cassava, and all that. That was going to increase the cost of food or the price of food. It's been dropped, so that is a good one. There's also a proposal that was there to have taxpayers who are disputing the taxes levied on them and want to appeal to the High Court. They're supposed to pay 50% of the amount in dispute before they can file the appeal. That has been dropped because there was a lot of hue and cry from the players in the tax industry and the multinationals and all the entities, because it will really affect access to justice and also affect questions about fairness in the process and how to prove someone innocent and make dispute resolution an affordable process for all those who want to go to court. So I think it's a mixed basket, but basically I think maybe in my parting shot, let me not preempt that. Let me finish it there. I think it's a mixed basket, some good proposals, some bad proposals.
Okay, coming from you, that there is a mixed bag of goodies. There are proposals and also the other proposals. That is well taken care of. And now, getting on to the question. in my country, I realized that one of the Asian countries, I'm not sure whether it's Dubai or United Arab Emirates, they don't tax. There is no provision for income tax. Same too, the Texas in United States, they also don't have that provision of income tax. Here in Kenya, the income tax is almost 30% of what people get for their salary. So do you think that for us, the government do for the purpose of getting income rather than depending on the income tax? Because even if you can, for example, Dubai or the UAE or Kuwait, so is it time or is the government look for other sources of income rather than depending on income tax?
I'm sorry, Jeremy. I don't know if it's only on my end that I can't hear you clearly. Are you having the same problem, Linus?
Oh yeah, I'm also having a problem trying to hear what you say. For a second
Probably
I thought that there was a problem between the
earphones and just speak verbatim. Probably it will assist to make it more clear. I think it's a comprehensive question now. I need to grasp it from every word.
Okay, can you hear me right now?
Yes, you're very clear now. Yes.
Okay. What I was saying is that we have the provision for income tax for Kenya, whereby it's 30%, and looking at the state assessment, provision, yet they are well developed in Kenya. So it is time for the government of Kenya to look for other sources of depending on the income tax.
Well, that's true. I believe, just to clarify that you're asking, is it necessary therefore that people should look for alternative sources of income as opposed to just relying on the income because it's taxed like 30%? Is that the question?
Generally, I want that the government look for other means rather, let alone the people. I'm talking about the government. Yeah,
absolutely. I agree that government should look for alternative means of or sources of income. I tell you, for instance, there's a quote I like to refer to that was given by one Winston Churchill of the United Kingdom, and he mentioned something very interesting that, you know, a government trying to tax itself into prosperity is like someone standing inside a bucket and expecting to lift himself out of the bucket using the handle of the bucket. You know, it's practically impossible. Yeah. So that is basically what our country is doing. We are trying to tax ourselves into prosperity, and it is not possible. We cannot tax our residents into prosperity. The best way we can do probably is to create conducive environments for taxation or for business, so that when businesses thrive, then we have, you know, money circulates, so that it is easy for even the government to be able to tap into the resources, because you can't tax what's not there. When people are not having money, even if you tax them, it's like a cycle there. It's just, you're just within the same basket or bucket, but you can't get out of it. So yes, it is true. I know of countries that have what we call tax havens. Tax havens are countries that have minimal tax rates. You know, countries like Mauritius, you know, Bermuda, the UAE, you know, those kind of countries, the taxes are minimal, but it is basically because of some of them are because of strategic locations. Like Mauritius basically relies on tourism to fund its budget. It's a good place sightseeing, and of course, because of the good scenarios, people like to go there, and so tourism itself funds a huge chunk of their budget. I also know of, you know, countries like UAE that rely on, you know, fuel, sale of crude oil and etc., just to finance its budget. So those are some of the things that we need to look at. We have, you know, very good sceneries in our country. Can we promote tourism so that then we build on the tax base in that sector? Can we promote, you know, some of the things that in Kenya that we have are unexploited? You know, some of the natural resources that we have are unexploited. Can we focus on manufacturing locally so that we don't have to rely on taxes to fund our budget, when in essence it makes life expensive, and basically no one gains from taxes. All of us lose, and it's really a burden to us. So I think, yes, it is important that we should look for alternative sources of income, and the government should be keen on building other tax bases or other sources of income as opposed to taxation.
All right. And sorry, if I'm getting you right, you're basically saying that overtaxing to like in a bid to salvage the economy, as the government is currently doing, is one of the most let's say rather not useful ways of trying to save the economy. Is that right?
That's true. That's true. That's true. Yeah, that's true.
So just wondering, is there any point that you've ever reached whereby you wonder why doesn't the government come to us for, advice before they can start taxing the citizens?
Okay. Well, government has very qualified experts. They hire some of the top minds. If you see those who are holding positions there, in terms of qualification, some of them go to the Ivy League universities in the world, not just in Kenya. So you wonder why they're not doing their job, and probably it's because of the position, they are pleasing their masters or sorts, or playing to the tune of the office. But I think we need a candid conversation on some of these things, so that we get to lower the burden of life, because taxes basically make life unbearable for the average Kenyan. The high class, some of them have, mechanisms that they use to avoid taxes. Some of them have huge pension schemes, medical insurance covers. Some of them have, debts and loans that they use to, recoup or plow back their profits into business. And so some of them don't really pay these taxes. But to the average Kenyan who is relying on a paycheck, and the paycheck is managed by an employer who has to remit 30% of that amount less they pay penalties for not remitting tax, it becomes unbearable for that person.
Okay. Getting on to the second last question from my end. We have the recent issue with the Keroche Brewery, whereby the Kenya Revenue.
Seems like I lost him.
Can you?
Sorry, Jeremy, you can just repeat your question again from scratch.
Kindly come again.
Okay. I'm saying there is a recent case of Keroche Breweries, whereby Kenya Revenue Authority decided to close down the shops of the Keroche Breweries, courtesy of the Keroche not having paid tax for some years back, to be precise. So, and there was also a case of Humphrey. Humphrey was on some distiller in Thika, which was also raided some time back. So, from your end, do you feel like KRA is being used for political purposes to kill businesses? What's your perception on that?
That's a catch-and-the-tree situation. Well, I will not want to go into the political questions about it. I want to be apolitical as an individual. But I think, for all intents and purposes, tax should not be a reason to close on business. Like the Keroche Brewery's case, like 400 employees are being sacked, and you're closing down shop because someone has not, as you allege, paid taxes. I think that is quite retrogressive, in my view. And the other point I would also make, even for the Humphrey Karaoke case, some of these things, much as there could be tax liabilities, the Act gives leeway for the revenue collector and the taxpayer to get into an agreement so that they can be able to settle the taxes depending on the conditions available to them. So if you don't have the money to pay instantly, you can agree with the taxpayer or the tax master, the taxman, KRA, so that you tell them, I can't pay this now, but given time, I can pay in piecemeal until I get to the point of completing the whole amount. But getting the point of locking down business, I think that is quite extreme. It's going overboard, and that is that. Sorry for that. That is quite extreme. It's going overboard. To probably look at the other ramifications, not just the financial implications, but you could ask yourself, where are these 400 employees going to after they have been sacked because KRA has closed down shop for Keroshe breweries? So I don't want to answer the question of whether it's political scores, but I think from a legal point of view, it defies the spirit of the law. Probably you should look at, even the Bible says that that the letter kills, but the spirit gives life. So sometimes the letter of the law doesn't serve its ends. We should look at the spirit of the law to ensure that we don't give rise to unjust ends.
Okay. Another question. I think now I still have 2 more to go. There's a question regarding what's the place of the tax appeal tribunal in the wider dispute resolution on matters tax?
Well, the tax appeal tribunal basically is the first point of appeal after probably the taxpayer fails to enter into an agreement with the taxman on the assessments. Maybe this can be better understood when I give a brief explanation of the procedure for, taxation and how matters get into the dispute resolution process. So basically, KRA will identify your organization for an assessment. So they give you a letter and tell you, we intend to conduct an audit of your books. Kindly provide the following information, and they give you a list. And some of them, they identify them, based on criteria. Some of them are random checks. Some of them are because you put yourself out there. Maybe you're advertising a lot, but when it comes to paying the taxes, they can't see. So KRA officers see your taxes or see your adverts on YouTube. Every time they open a video, they see, Bolt, they see all that. But when it comes to your KRA PIN, they check the remittances, it's 0. So like, there's something not adding up here. So they can come and say, we want to see your books. So from that kind of thing, they come and issue a notice of assessment. Okay, they give you a notice that they want to audit your books, ask you for information. Once they complete that, then they give you an assessment. They say, based on what we have looked at in your books, we have found the following tax liability, and we request you to pay. And of course, you have the right to object. So after that, then, if the party is dissatisfied with that particular assessment, then they go to the Independent Review Objections Office. It's called the IRO, which is resident within KRA. So you go to that office and tell them, based on my own assessment or based on the advice from my consultants, the following issues remain unresolved. 1, I don't agree with A, B, C, D. So the IRO will also give an objection decision. They look at that, look at the objection, look at the assessment of KRA, and then they'll issue an objection decision. So if you are still dissatisfied with the decision of the IROO, then you then appeal to the Tax Appeals Tribunal. So really, it is the first point of appeal. So really, Tax Appeals Tribunal is the first point of appeal. Before then, you can move to the High Court if at all there is further disagreement. Sorry, I didn't get that.
We can't hear you.
Can you get me now?
Yes.
Okay. My last question is, your advice to those who don't the process.
Sorry.
My question is, what will be your advice to those who would like to be tax consultants, and what is the process to becoming one?
Great. That's a good question. Well, being a tax consultant is basically having the qualifications. You need to have the skills and expertise. So probably I'd advise that you can, if you can get time to do the courses, we have, KESRA is one of the institutions that give short courses and short trainings on tax qualifications. You can enroll for that. Or you can, if you have time to do courses like CPA where they train on taxes, that can also be necessary. But still, even if you don't do that, we have seen people out here who didn't do tax as a unit in university or in a college, but they are thriving in the practice of tax. So it's a question of interest. You should read a lot of materials out there. There are books, there are articles. The tax acts are clearly spelling out what is in tax. Actually, it is a rule in taxation that if it is not in the law, then it is not tax. So everything in tax is clearly spelled out in the act. So if you have an interest, read the act, read the judgments of the courts. They get to tell you the practice of tax out here. And if you can get a mentor to help you with the technical skills like computations and stuff, that will also be necessary to help you out. So probably in summary, one, get the training, but if you can't, read the acts, and through interest, get a mentor.
Thank you, Elder Brian. That was all from my end. I think Linus, take it over.
All right, Brian Otieno, thank you very much, Wakili, for this time. It feels like we came to you for tax consultancy. So in case your firm fires you for having not charged us before this session, please, our apologies in advance. So but we really thank you and appreciate you for having agreed to show up for the 5 minutes of your time show, and also having spared a bit of your time for this. Asante sana.
Oh, yes, thank you so much, Linus and Jeromil. Looking forward to the next talk show. I hope it will be on church now.
All right.
All right, bye.